In Forex trading, there is what we call time zones. And today I'm going to teach you how to take advantage of time zones. Time zones are very important when it comes to trading, especially Forex as well as every other asset class that surrounds it. What is the advantage of a time zone? And what is a time zone before that? A time zone is a zone where the markets gets to be a little bit more volatile than average. It is a moment where certain markets get to open. For example, banks, stock exchanges, they get to open at a specific time, and when they do open, there is a more than usual volatility or liquidity that is available in the market, and you taking advantage of that will give you an edge over a trader that does not know anything about time zones. In Forex trading, there are 4 time zones, but the main ones are 3 time zones, namely the London session, the New York session, and the Asian session. So the Asian session starts around 02 towards 05. The London session starts around 9 hours CAT, and the New York session starts at 15:30 CAT and sometimes 16:30 CAT. So you knowing those times, you need to be careful, because it is in those time zones, or rather sessions, that the market seems to be more volatile, and it is a place where there is a little bit more volatility. Does it mean that there is only volatility in those sessions? Not necessarily, but there is a higher percentage of probability that there is more likely going to be volatility in those time zones. So it is better for you to watch out for those time zones. Now, having to know this, how does it benefit you? Generally, in the London session, the market consolidates, the market goes sideways. It is neither upwards or downwards, it just goes sideways. So in those moments, it is not really safe for you to trade, because the market has not taken any direction. After the Asian session comes the London session, which is 9 hours CAT. What happens in the London session is that the markets by that time will make an impulsive move, either upwards or downwards. But here is one thing that you need to know. That impulsive move is generally a fake move in order to break either the current low or the current high and take the orders that are above or below. And after it happens, it wants to lure people into going in that direction, into entering the market in that direction. And when it is 12, 13, 14 CAT until 15:30, what generally happens is that there is a reversal. And the reversal is generally the real direction. After people have been trapped into that 9 hours, the movement, they fail now to come out because the market is reversing and they're negative. And generally what happens in the New York session is the real movement, and it takes people that were buying out and it takes out people that were selling, so that it goes in the right direction. So what do you do as a trader that is proficient and a trader that is smart? You need to analyze the time zones very well, know when to enter, and know when the real movement starts. If you trade anytime, anyhow, you are not going to have an edge. So with this information, get to know your time zones, get to know when you're supposed to trade, and get to know above all when the real market it is going to happen. This is Solomon Serge, and I'm leaving you for now. Until then, see you.